Global economy. I'm joined live from New York via Skype by Thomas Hayes. He's the founder, chairman, and managing member of Great Hill Capital. Welcome back to the show.
Hi, Rochelle.
So let's start with your reaction to Fed Chair Powell's speech and any new takeaways that you're seeing on the U.S. economic recovery.
Yeah, well, Powell came in very aggressive to get stimulus done, and I don't blame him. He said there's no harm in overdoing it, that this is the wrong time to take the foot off the gas, and adding fiscal to monetary policy will enable to alleviate hardship on millions of households, and no fiscal stimulus would actually exacerbate inequality. So that's what he was really going for with the stimulus pitch, while the Republican Senate and the Democratic House are between $1.6 trillion and $2.2 trillion. But as far as the economy, we're really humming along. So the size of the package they want, if you look at U.S. GDP is expected to contract at negative 3.5% for 2020, but then it's going to grow at 6% in 2021. And the size of the stimulus package that they're talking about is 8 to 11% of GDP. So imagine, Rochelle, you're trying to fill a $750 billion pothole with another $2 trillion of asphalt. So despite what you saw with the stock market today, it's not quite that urgent. They will get something done certainly after the election, maybe before the election. But I think the most important thing that people are overlooking is there's $300 to $400 billion left from the CARES Act that has not been spent, that was approved by Congress, that you could potentially see another executive order to get those funds in the hands of those who need it the most, right, in the form of possibly stimulus checks and in the form of enhanced unemployment till the end of the year.
Now, that does still leave a lot of uncertainty, though. Obviously, that pocket of money hasn't been distributed. We're not sure exactly when that's going to happen. And you do have the Fed's predictions, but you also have more job layoff announcements, and then Trump obviously tweeting about putting the stimulus talks on hold until after the election. What does that mean in terms of potential economic consequences when you have the Fed on one side, the president saying something else, and the people sort of stuck in the middle?
Yeah, so basically you've seen continuing claims continue to decline every week. We've already gained well over half of the jobs that were lost due to COVID, and we surprised everyone on Friday seeing the unemployment rate drop below 8%. So while on the one hand we definitely want to have the stimulus, as you saw the IMF chief, she said now's not the time to let up on the global fiscal stimulus or withdraw that too quickly. Our recovery is V-shaped. It's going to continue that way, and the stimulus would only ensure that those most at need are getting taken care of now, and that's critically important. But the growth trajectory is really on the right path. And as far as the layoffs that you saw some temporary jobs with regard to the census, and you're seeing sporadic layoffs from corporations. But on balance, that employment rate comes down, the continuing claims comes down, and the employment picture looks pretty solid. But we could definitely use A, potentially an executive order, and B, a stimulus either now or more likely after the election for sure.
And certainly important, given that obviously a lot of people not included in that unemployment number have also stopped looking for work. But as we look at the bigger picture, you mentioned IMF Chief Georgieva unveiling her organization's global economic outlook amid COVID, saying, look, the economic outlook is less dire than we saw in June's predictions of a 4.9% contraction. So what do you attribute that to?
Yeah, well, you know, they've always been very conservative, and they really weren't even in the ballpark in June. For instance, in the United States, they anticipated that we would contract by 8%. It's not going to be anything like that. There was talk that we would hit 20% unemployment. We're now under 8%. So, and even China, they predicted would only expand by 1%. China is now going to expand by 2.3% this year. We'll expand 6% next year. China will expand 7%. So I think this is another case of being overly conservative, which is the cautious thing to do, keeping the pressure to keep the global fiscal stimulus, as you alluded to. $12 trillion of global fiscal stimulus has played a critical role, coupled with global coordinated monetary policy, to create this type of recovery. And you don't want to let up when you're just gathering momentum. And certainly Chair Powell has been correct about that, and the chief of the IMF as well. So we definitely want to get some type of stimulus out there soon and keep this going.